Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 8th of August. I'm Caroline Hepker in London.
And I'm Stephen Carroll. Coming up today, Donald Trump focuses on pharmaceuticals, semiconductors and India as his next tariff targets.
OpenAI is in early talks about a share sale for employees, valuing the startup at $500 billion.
Plus, why more of Europe's biggest companies are picking insiders as their new CEOs.
Let's start with a roundup of our top stories.
With less than 24 hours before Donald Trump's latest tariffs come into effect, the US president says there are more levies to come on pharmaceuticals, semiconductors and countries that buy Russian oil. Trump says the sector-specific tariffs will be announced within the next week or so. Speaking to CNBC, the president singled out India for an announcement in the coming hours.
We do very, very little business with India because their tariffs are so high. So India has not been a good trading partner because they do a lot of business with us, but we don't do business with them. So we settled on 25%, but I think I'm going to raise that very substantially over the next 24 hours because they're buying Russian oil, they're fueling the war machine, and if they're going to do that, then I'm not going to be happy.
Donald Trump added that he was close to extending a trade truce with China, which is due to expire next Tuesday.
Switzerland's President Karin Keller-Sutter has arrived in Washington to make a last-minute bid for a deal to lower the country's tariff rate of 39%. Bloomberg understands that she flew to D.C. without a formal invitation from the White House, hoping to make progress before the new rate kicks in tomorrow. President Trump's move last week stunned the Swiss after talks that they had thought looked promising. Her shuttle diplomacy follows an emergency government meeting where ministers agreed to present a new offer to the US. Gold, agriculture, planes, drugs and energy are some of the areas that may feature in any talks.
The S&P 500 is near all-time highs despite the tariff gloom. On the bumper, gains will boost Wall Street bonus pools. Compensation consultant Johnson Associates says payouts are set to rise across the sector as expectations edge higher. Bloomberg's finance reporter Catherine Doherty says it's not the usual hotspots.
It is a good thing for the traders on Wall Street. Equity trading has seen records in the second quarter. That is translating through to compensation. I mean, right now, equity traders are projected to get as much as a 30% bump. That's the highest across any of the financial industry that we have seen. The question becomes, does that volatility, does the momentum that we've seen through the first half of the year continue through the second half?
Doherty adds that debt traders are also showing strong performances, but the positive news comes as firms also look at how AI might help them streamline their staffing costs and manage expenses.
President Trump says that he will decide on a replacement for outgoing Federal Reserve Governor Adriana Kugler this week. The Fed announced on Friday that Kugler would resign, giving the president an earlier opportunity to install a candidate sympathetic to his calls for lower interest rates. Despite Trump's pressure campaign, Andrew Sheets, Global Chief of Corporate Credit Research at Morgan Stanley, says the Fed is still likely to hold rates in the immediate future.
On Morgan Stanley's economic forecasts, the next couple of months are going to see inflation tick up and growth tick down, growth continue to decelerate. And, we think that puts the Fed in a difficult position. As you mentioned, even though markets are pricing roughly a 90% chance of a September cut, we still think it's more likely that they do not cut in September, given that inflation path.
Morgan Stanley's Andrew Sheets there. President Trump reiterated that he is still considering 4 candidates for the main post of Fed chair. Whoever is chosen for the open governor position will also likely be in the running to lead the bank after Chair Powell's term ends.
We'll do some breaking earnings news this hour from Germany's Commerzbank, which has reported net interest income that beat estimates in the second quarter, 2.06 billion euros. It's also applied for an up to 1 billion euro share buyback. Now, Commerzbank has a high bar to meet with these earnings after its strong share performance so far this year. The stock is up 106% year to date, which is the biggest gainer in the stock 600 banks index. It's been boosted by Germany's fiscal expansion and UniCredit's interest in the lender.
Now, OpenAI is in early talks about a potential share sale that would value the business at $500 billion. Bloomberg understands that the stock would be available for purchase by current and former employees and existing investors, including Thrive Capital, who have been asked about buying some of the employee shares. If the deal goes ahead, it would elevate OpenAI's on-paper price tag to roughly 2/3. Its previous valuation stood at $300 billion. The move comes following the news last week that the startup has secured $8.3 billion from a syndicate of investors in a financing round that was oversubscribed by about 5 times.
In the UK, a new assessment from a leading think tank says the Chancellor of the Exchequer, Rachel Reeves, is facing a £51 billion hole to fill in her autumn budget. The National Institute of Economic and Social Research has warned the Chancellor may have to break Labour's pledge not to raise taxes if she wants to make up for the shortfall. Slow growth, higher than expected borrowing and U-turning on planned cuts to welfare benefits has put Reeves on track for a large hole in the government's spending plans. NISR is also predicting that UK GDP will grow by 1.3% this year and 1.2% next year, though it warns that tax rises in the autumn would likely weaken the economy.
Now to Israel, which is weighing an expansion of its armed presence in Gaza. Prime Minister Benjamin Netanyahu is considering whether to deploy the Israel Defense Forces into the 25% of the Palestinian territory not already under its control. The deliberations come as Israel faces an international outcry over its near 2-year-long war. The families of Israeli hostages held captive by Hamas are urging Netanyahu not to go through with the offensive. One relative, Nama Shueka, says that she wants a peaceful resolution.
We need to get rid of Hamas. That's 100% right. But I think there is one way to get the hostages out right now, and it's making a deal. Obviously, fighting in Gaza, it will put the hostages in danger.
Nama Shueka speaking there, whose cousin is being held hostage by Hamas. Several international governments have spoken out against the spiralling humanitarian toll on Gaza's 2 million plus population.
Those are your top stories on the markets this morning. The MSCI Asia Pacific Index is up 0.2%. Euro Stoxx 50 futures are 0.3 higher this morning. The 10-year Treasury yield is up a basis point at 4.22%, and the euro just slightly stronger against the dollar in trading today at 115.79.
Now, in a moment, we'll bring you more on the tariff pressure on India and Switzerland ahead of new levies coming into force tomorrow. Plus also why European companies like Novo Nordisk and Renault are picking insider CEOs to handle economic turmoil.
But another story that I've been reading this morning from our food editor, Kate Crader, about using AI to plan dinner, which is apparently now also big business, as well as something that I think quite a lot of us might admit to if we were asked.
Yes, I think that meal planning is one of those jobs that you always need a bit of help with. But HelloFresh is apparently spending $70 million on expanding its menu for subscribers with the help of AI. So the boss in North America has talked about how it's going to deliver more restaurant quality ingredients, global flavours, so higher quality ingredients, bigger portions, but more choice over the meals and the menus that you can choose over the course of a week.
So essentially the way the AI comes into this is that the more that you order from this company, the more they're going to give you Netflix style prompts of what you might want to cook next. You know, you enjoyed this lemon chicken. Have you tried this other chicken dish or whatever? But part of it is also the filtering is based on how labour intensive the recipes that you pick are. So if you're always picking ones that take 5 minutes to make, the AI will guide you towards those shortcuts.
Stephen, is there any recipe that takes 5 minutes to make that counts as cooking?
Sandwich, maybe? I think that's probably as close as you might get. Okay. But an interesting read from Kate Crader, and we'll put a link to it in our podcast show notes.
Now let's bring you up to date on the latest trade tariff news this morning. Donald Trump says that he will raise tariffs on India within 24 hours over its Russian gas purchases, while the Swiss president is in Washington, apparently without an appointment to see the US president. Our EMEA news director, Rosalind Matheson, joins us this morning for more. Good morning, Ros. So we've been reporting on the pressure that is ramping up on India from the White House. Does Narendra Modi look likely to give in?
Well, that's going to be the interesting question because, of course, it's such a turn of events between these two leaders who, until recently, very warm relationship, almost effusive praise for each other. And suddenly Donald Trump is really singling out India in all of this, particularly over its purchases of Russian energy, which have continued since Russia's invasion of Ukraine. He's not really going for China on this, but he definitely is singling out India and indicating that he's going to increase penalties on India over that. And that's on top of the existing tariffs that are going to be coming onto India and possibly also on the pharmaceutical sector also, which would be potentially very damaging for India. And the question is, how does India respond to this? This suggestion at this point is that India won't retaliate to it, but equally that they're not going to give in. They're going to hold the ground. Perhaps they can make some concessions elsewhere. Like many other countries, look for something to give Donald Trump. But are they going to back down from purchases of Russian energy? So far, it doesn't seem so. And so the question is, can they find some other thing to give Donald Trump to make this all go away? And at some point, is it the personal relationship again between Narendra Modi and Donald Trump that has to find a way through?
Well, pharmaceuticals also in focus for Switzerland, but they're facing a more looming problem, which is the 39% tariff due to come in to force tomorrow. The Swiss president's gone to Washington without an invitation from the White House, but is she likely to make any progress when it comes to talks with the US president?
Well, speaking of personal relationships, she doesn't really seem to have one with Donald Trump, and that possibly is a real issue. They had a phone call recently which didn't appear to go particularly well. He said that he felt that she came to the conversation with nothing to offer him, and was she really prepared for that conversation? And so she doesn't really have the leverage of a long-running relationship with him, and turning up in Washington unannounced, also in a way seeking a meeting with him. And the question is, will he be willing to see her, or is it one of those horrible moments where she turns up in Washington and doesn't get the meeting and needs to leave again? And the question of leverage there, I mean, what can Switzerland offer Donald Trump? China's got the advantage of having rare earths, so you've got leverage. Again, what does Switzerland have in terms of leverage? What can they give him, again, to make this all go away? And can they do something else along the lines of perhaps other sectors than pharmaceuticals, perhaps agriculture, gold or something?
Yeah, absolutely. I mean, Swiss perhaps also have maybe a unique issue with the relationship because their presidents are only in office for 1 year. It rotates amongst all the cabinet members. So, yeah, really interesting. Ross, thank you so much for being with us this morning, thinking about what's happening with the White House. Our EMEA News Director, Roslyn Matheson.
And Novo Nordisk reports its latest results today after the weight loss drugs maker has seen its value drop by 2/3 in share price in the last year. It's also one of a growing number of European companies that have picked new CEOs from within their own ranks. Renault, Nestle and Unilever are among the firms that have chosen insiders for the top job in recent months. Our reporter Sabah Meddings has been looking into this trend and she joins us now for more. Sabah, what are the common threads among these companies then?
I think you've kind of summed up quite a lot of it there with your talk on tariffs and also Novo with the tumbling share price. It's it's a particularly exposing time to be a chief executive. As headhunters that we spoke to telling us that this is a period of unprecedented challenge, and a lot of companies that really they're grappling with consumers under pressure. They're perhaps at the start of the year they were sort of trying to get used to the new normal, and now it seems that things are changing all the time. Boards are now more willing to pull the trigger. So then we have seen this spate of these changes on the top ranks, and companies need quick change. They are sort of looking to people, from within their front benches perhaps to take over. Investors are wondering what the plan is, and so all of these companies that you sort of mentioned there, they really need to get their house in order, and they've looked to make a change at the top.
Yeah, so boards are choosing then from within their own ranks rather than recruiting outsiders. I mean, you've talked a little bit there about why there might be advantages to that. I mean, are companies missing out on an opportunity if they don't look externally at all? What's the thinking?
There is that risk there, and certainly, perhaps an insider, some experts that we spoke to said they may be a little bit too entrenched in the culture to make real change. But if over the last 5 years, there's been much more pressure from investors for boards to really have a known succession plan, like what does happen if the CEO needs to move suddenly. And if you're recruiting internally, they say that they're a known entity, you can understand their track record. They're much more sophisticated now with kind of tests to make sure they're really aware of how people react under pressure. And also, if you look at Unilever, some of the other companies, they have brought in quite dramatic cuts within the company, big reorganisations. And the suggestion is that someone who already knows the staff, knows the company really well, can kind of get the troops on board with quite dramatic change, and perhaps has that rapport and has sort of a bit more loyalty within the company to make those tough decisions and kind of get people on side with them. Fernando Fernandez at Unilever, for one example.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.